Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments for Tuesday, the 11th day of August. D's corn had a 6 cent range last night, um, traded as high as 64 and as low as 59 and three quarters. We're sitting right here at 460. That is the halfway back 50-day moving average fighting zone. November beans down 4 cents, traded as high as 11.82 as low as 11.75 and a half. An 8 cent range, and we are on the bottom of that range. December wheat down 6 cents after trading with a 13 cent range from 65 to 53. I call it 12 and a quarter cent range. In any event, no completely bananas action overnight. We're going to wait and see what the USDA says on Wednesday, and then how we settle Friday is going to be very, very key. If any of those numbers, i.e., yield or production, is out of whack, we could reprice. We're sitting at a critical point in both well, in all three grains, corn, wheat, and beans. Beans need to hold the 100-day moving average at 1171. If that fails, it opens up the door to 1136. These corn needs to hold this 459, 458 area. If that fails, it opens up the door to 451. And yes, you probably are as sick of technicals as I am at this point, but barring a fundamental story. Now, we continue to get excellent exports in corn. I can't imagine the price of what corn would be if we weren't getting the exports we have. The problem is, South America and produces a lot of corn and beans right now, and the market has changed quite a bit in the last 10 years because of that dynamic. So moving ahead, we'll see if the USDA can throw the bulls a bone on Friday. In the cattle market, October cattle finished up a buck 60 yesterday with a tight trade. Um, October feeders finished up a buck, but also in a tight trade. $4 is very, very tight. I wouldn't be surprised to see that market open up here in the next couple days with a bigger trading range. And the hogs, after sliding lower for 9 days and looked like it was going to challenge the recent contract lows, which we hit back in June. I called it 8 month low, 9 month low. But in any event, the market did have another correction higher. What did it do? Well, it did 38% retracement of the last down move. If I'm a farmer producer, I think at this point I'm going to be using rallies to try to get better downside protection in case this market falls out of bed. In the outside markets, you do have crude oil trading at 81 again, traded as high as 84. Uh, that is all being driven by the headlines, and those change every 5 minutes. Okay, guys, this is Chris Robinson, Robinson Ag Market. If you're looking for help, give me a call. I have 32 years of experience. And if you're looking for a helping hand, someone to ask questions about what are good hedges, what are good cash sale levels, that's exactly what I built my program on. Take care. Have a great day.